Be Wealthy and Smart, episode 1561.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about stocks being at new highs after the Fed made its 0.25% rate cut. Yes, the highly anticipated 0.25% cut came after the Federal Reserve decided with an 11-1 vote that it would cut rates by 0.25%. That keeps its overnight funds rate in a range between 4 to 4.25%. Only one policymaker voted against the 0.25 point, but he voted for a 0.5 point cut. The Federal Open Market Committee commented that economic activity had moderated, but added language saying that job gains have slowed and noted that inflation has moved up and remains somewhat elevated. They also said uncertainty about the economic outlook remains elevated, and the committee is attentive to the risks to both sides of its dual mandate, which is full employment and 2% inflation, and judges that downside risks to employment have risen. And of course, that's because the unemployment rate went up by almost 1 million people, 911,000 to be exact, as an adjustment to the numbers over last year. Chair Powell characterized the rate cut as risk management rather than something more directed at shoring up a weak economy. Dan North, chief economist at Allianz Trade North America, said, "I don't think that's risk management. I think that's steering the ship. We're going to take this cut here and there and use it to help prevent anything from getting worse." Powell talked about the labor market in his remarks and said the market slowdown in both the supply of and demand for workers is unusual in this less dynamic and somewhat softer labor market. The downside risks to employment appear to have risen. Simon Dangor, head of fixed income macro strategies at Goldman Sachs Asset Management, said a majority of the FOMC is now targeting 2 further cuts this year, indicating that the doves on the committee are now in the driver's seat. "We think it would take a significant upside surprise in inflation or labor market rebound to take the Fed off its current easing trajectory." And Fed projections released following the meeting on general economic conditions saw slightly faster economic growth than was projected in June, while the outlooks for unemployment and inflation were unchanged. Of course, on the jobs front, the unemployment rate hit 4.3% in August, still relatively tame by historical standards, but the highest since October of 2021. Job creation has been stagnant this year, and a recent update from the Bureau of Labor Statistics showed that the economy created nearly 1 million fewer jobs than initially reported in the 12-month period prior to March 2025. So after the news of the rate cut, the 3 major averages, the Dow, the Nasdaq, and the S&P 500, all closed at all-time highs. And even the Russell 2000, which is smaller companies, surged 2.5% and ended at a record for the first time since 2021. Aswath Damodaran, a professor at New York University's Stern School of Business, said the market is being held afloat by the earnings numbers. Absolutely, the market is driven by earnings, and the better earnings are for each company, the more stocks go up. So the fact that we have strong earnings is really what's buoying the market. And the Fed rate cut is just positive news in the background. This also sent gold to new highs and gave it 5 weekly winning streaks. Gold's been on a tear recently as the dollar has fallen on expectations of Federal Reserve rate cuts. One not so encouraging thing was the Fed gave a hawkish outlook for rates in 2026, where officials are predicting only 1 more rate cut next year, slower than the current market pricing of 2 to 3. So a lot could happen between now and next year. I still have at least 2 rate cuts happening this year and rate cuts happening next year. Lower interest rates are good for bonds, equities, gold, and real estate. So even though I'm expecting some short-term bumps here soon, once we get to the other side of it, things will look very good indeed. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.